It's our New Year's Eve cliffhanger. You know him, you love him. Ernie Scheider, Reuters correspondent here. All right, Senate reconvened at 11 a.m. We're not hearing much good news coming out of these meetings this morning in terms of a deal for the fiscal cliff. Clock is ticking.
Got under 12 hours right now. Will they come to a deal? Will they not come to a deal? I think a lot of people are saying, they'll come to one like 10 minutes before midnight. But, we've been saying that for a while now. They'll come to a deal, and they're nowhere closer to a deal.
A lot of coffee.
Exactly.
Yeah.
We've been making a deal for a while. We're nowhere closer than we were a month ago.
So what do you think CEOs and companies, you're out there, you're writing a story today, making calls, layoffs. What do you think about how CEOs and companies are reacting at this 11th hour?
A lot of CEOs are telling us, look, we've been saying the same thing for a while. Washington needs to come to a deal to avert this fiscal cliff so taxes don't go up and spending plummets. We need to come together. And a lot of CEOs are reiterating that to us today. CVS Caremark CEO was saying, look, I've been out there. I've been telling you guys have to come to an agreement. And that comment was echoed by a lot of other CEOs saying, just come together, get a deal done.
So how will they respond? Will we be seeing more layoffs at these companies, do you think?
Well, a lot of companies have already announced big layoffs out there because they had to already plan their 2013 out already. It starts tomorrow, basically. And so, you look at companies, especially in the raw material sector at Dow Chemical or DuPont, they've announced thousands of layoffs. Yes, partly because of the recession in Europe, but also because they say we didn't really know what 2013 was going to happen from a fiscal cliff perspective, so we just had to go with what we knew. And so they just basically went and said, look, we can't afford some of this, and they announced the layoffs.
And I guess in some sectors like defense, might see shares plummet there if, in fact, the cuts do go through.
Yes.
Definitely. All right, let's take a look and see how the markets are doing today. In response, we don't have red arrows, actually. It's not so much gloom and doom in terms of the markets.
I'm very surprised, actually. You'd think they'd all be really, really down. I think it gets back to this sort of general feeling a lot of people have, like, they will come to a deal. They will come to an agreement. When you talk to the man on the street or, the big hedge fund investor, I think a lot of people are betting that we don't go over the cliff.
Maybe even retroactively. That if
Perhaps.
It's not by midnight tonight, that something will happen a few days or weeks down the road. Let's take a look at Brent crude, actually, and see what oil prices are doing here, if we can pull that up for a sec. There we go, futures there. We were basically... But it's its highest average, right?
Highest average for the year, yes, ending right there. And, we're talking about kind of the fiscal cliff here in the U.S., but Brent is primarily traded and used in Europe. And there's a lot of geopolitical uncertainty out there right now from Iran with the Strait of Hormuz, a lot of big demand from China and elsewhere. So that's really helping to prop up the Brent.
Let's just wrap up and look at 2012 in terms of the markets, actually. S&P 500 was up for about 11.5% for the year, Dow up 6%, NASDAQ up about 14% for 2012.
Really strong movements, but I just like to remind people that that's from certain lows to begin with. So we already really were low. We had to make up that ground.
And of course, one major factor is the debt ceiling, is really getting a deal together on this debt ceiling, because another credit downgrade, that's not so good.
It's not going to be good. Tim Geithner, the Secretary of the Treasury, came out a few days ago and said, look, we're going to hit that debt ceiling on December 31st. That's today. And so he wants it raised. A lot of Tea Party Republicans don't want it raised, though. And so they're going to basically draw a line in the sand and say, you know what, cut spending rather than raise the debt ceiling limit.
Yeah. All right, let's move on and talk about banks. A story out of the Wall Street Journal today that's saying banks were among the best investments for 2012. The financial sector of the S&P 500 up 25%. Outpacing the S&P, the broader S&P, which was up by 12%. Stocks were a bargain, basically. Mainly many of them trading at far below the value of their assets.
A lot of value investors came in and said, you know what? Oh, wow, something like a Bank of America was $5 a share at one point during the year and got into the name. As a result, the name like Bank of America more than doubled in value in 2012, and that's really helped out a lot of large funds out there. Financial companies are really the glue that holds an economy together. They lend money to companies that go out and hire and buy products, on and on down the line, and that just further helps the economy. So when the economy grows, banks grow.
But the Fed's been helping out, obviously, by pushing more money into the economy. Lower interest rates, but that's not necessarily a good thing in terms of the profits of the banks.
Right. It's a mixed bag. That hurts, the margins at the banks out there. Yes, it does help lower unemployment, but, the banks like sort of higher interest rates. Why? Because they make more money. So we'll see where we go in 2013.
Another sticky point could be regulations in terms of these businesses growing at the banks.
We have the Consumer Protection Bureau out there right now. We've got several new senators in the U.S. Senate. Elizabeth Warren, who's been kind of a fierce advocate for what she calls consumers out there. And so you can expect closer scrutiny on big banks out there so they don't get what she likes to call too big to fail.
Right. Well, it was a boffo year for banks, and we'll see what 2013 holds. Let's move to the hotspot, Ernie. And as we do, remember, we've got more headlines of the day on the bottom of your screen. Let's talk Apple. Speaking of Bafo business, will it become the world's first trillion-dollar company and reach $1,000 a share? What do you think?
Your guess is as good as mine, but they do have a really solid product pipeline that consumers love. When you buy an Apple product, it just works.
Yeah.
And so I think consumers really, really like that. And the company puts a lot of investment into making products that just work. And so consumers will pay more for that.
Story out of Seeking Alpha that says perhaps its weak link is its spending on R&D compared with its competitors, because everybody else, Google, Microsoft, getting into the hardware game. And if you take a look at this chart that we have up here, you can see 2% of its sales going into what it's spending on R&D, Apple at the bottom of that chart.
Well, when you contrast it with like a Google, which is a relatively new company when you compare with Apple, I think you can sort of see the differential. Google has ground to make up. Apple's been around for a long time. It's got a well-developed product pipeline. They do marry hardware and software perfectly. It's what they do really, really well. So if I were Google, I'd be spending a lot more to try to catch up with an Apple. So I sort of look at those numbers and I don't necessarily see a big worry or a big question mark, because the company still is huge and 2% of its sales, let's not forget, is a lot of money.
And there could be two huge events for Apple in 2013. One is a possible deal with China Mobile, which is the world's largest carrier. They still sold 2 million iPhones in China without it. Yep. And ITV, will we finally see that?
Yes, these are two big, huge potential boosts for the stock. Maybe that'll take them over the $1 trillion mark. It's not, but with the Apple TV, the iTV, it's been rumored that they're going to reinvent the way we look at television.
Right.
And Apple's reinvented the way we look at music and other things. So, I wouldn't be surprised if they do it.
Absolutely. All right. Speaking of reinventing the way we all connect to each other, Facebook. Up 2% today, and the news this morning is that BMO, which has traditionally been bearish on Facebook, upgrading from sell right to buy and more than doubling the price target from $15 to $32.
Yeah, big jump right there. And part of the reason is that Facebook is beginning to get a handle on this mobile ad situation that had been a concern for a lot of investors for a while. And big Madison Avenue companies had said, we're going to hold off on buying ads, but now they seem to be coming back in because they're realizing most people have Facebook's app on their smartphones, so that's eyeballs. So the better Facebook gets at monetizing that, the more interest you get from large advertisers.
They literally went from 0 in terms of those mobile ads at the beginning of the year. 0 to 60 in how many seconds? But yeah, they're really ramping up, and you will soon be getting streaming video in our news feeds, like it or not, on Facebook.
And it's another way to monetize right there. If you want to do, still, or if you want to do video, you pay Facebook, you can get it on there.
Anyway, lots of banks still holding consistently on that buy rating for Facebook. Let's close it out. The last one of 2012. Drum roll, please. Azukulator. Oh, and he ends very nicely there. 13, getting into the teens. 13.3 billion Zuckerberg's worth.
He can buy a Corvette with that.
He can buy the whole wide world with that. Yes, he can. All right, Ernie Schneider, I'll see you next year.
See you next year.
All right. Remember, folks, follow us on Twitter at Reuters Insider. Check out our YouTube channel, Reuters.com/Reuters TV. Happy New Year. I'm Lisa Bernhardt, and this is Reuters.